Name's Tyler Steinhoff. I'm part of the life annuity and long-term care team here. Good to see everyone who's jumped on so far. Today, we'll be having Michael from National Guardian Life go over a product demo 101 on the traditional LTC plan. Uh, Michael's over from Northern California on here with us today, and he's going to go into detail about how the plan works, its highlights, and a little bit on how to speak again and open up the long-term conversation. So you can go ahead, Michael, whenever you are ready.
All right. Well, hey, thank you, Tyler. And hello, everyone. Again, my name is Mike Simonstad. I am with National Guardian Life. And today we're going to talk about our product, how it works, the moving parts, the choices, and the options, and the sweet spots, right? Where our product fits in to the whole world of long-term care planning. And before we dive into it, and the goal here is, 35, maybe 40 minutes, and open it up for questions, any questions you may have. But before we start, I want to say one thing in that to sell long-term care solutions, including traditional long-term care insurance, which what this is, you do not have to be a product expert, right? I mean, listen, it makes sense to, know the moving parts and know the market and know what, generally what type of product does what. But I will tell you, when it comes to long-term care planning, an ounce of passion about this subject will go a lot farther than a wealth of product knowledge. So, what we're going to do here is go over the product, but keep in mind, you do not have to be a product expert to sell that. I'm the subject matter expert. You'll see my contact info at the end. Tyler knows this all very well as well. So, if you need, you ever need, detailed product information, reach out to us. There's no need to look at a sample policy and memorize it or anything like that. We are your subject matter experts. So I just wanted to, keep you keep you informed of that. So to get started, when it comes to traditional long-term care, when it comes to long-term care solutions in the market, there are essentially three types of leveraged long-term care solutions that are available today. You have traditional long-term care insurance, um, such as this product with National Guardian Life. Other carriers are Mutual of Omaha, Thrivent, New York Life, Northwestern Mutual. Those are that's essentially, that right there is your traditional long-term care market. But then you also have, as I'm sure you're aware, asset-based long-term care solutions, right? Where you're repositioning a single sum or over 5 or 10 years, for example, repositioning money to get leverage. So you have those types of products as well, which is such as Nationwide, Securian, Lincoln. Those are the big players in that space. And then, of course, you also have, in the world of long-term care solutions, you have multifunctional life insurance, right? Which is essentially, usually a permanent life insurance that has a long-term care or a chronic care rider that accelerates that death benefit if needed. If long-term care, if a long-term care event should occur. So other people call them living benefits with life insurance. So those three categories pretty much make up the types of leveraged long-term care solutions. And I should mention that in the asset-based category as well, you have annuity solutions as well. So, but right here, our product at National Guardian Life, we do traditional long-term care insurance. And in the world of long-term care solutions, it's pretty much a fact that, for people consumers who want just one thing, right? They're trying to solve one thing, and that's a long-term care need and nothing else. And especially if they've had, a long-term care event occur in their family or they've been a caregiver themselves. Well, traditional long-term care insurance is generally, dollar for dollar, the most long-term care leverage you're going to receive. All right. So that's pretty much, long-term care 101 right there in terms of the types of solutions available generally for traditional long-term care. Again, it does one thing and does it very well, pays for long-term care services. So in relation to the dollar amount you pay in premiums, it's tough to beat the benefits that you get with traditional long-term care insurance. And if you have any questions about that or comments, of course, we're going to open this up at the end for any discussion. Now, what is National Guardian Life? What's their niche in this market? Well, it's traditional long-term care, and we cut to the heart with the NGL product, to the essence, the very essence of what insurance is, right? Pure risk, pure protection. In that, you could argue that the essence of insurance is to transfer the most amount of risk for the least amount of premium in case something happens along the way. And that's where we fit in, because in the whole world of long-term care solutions, it's hard to beat the benefits one can receive, especially a couple, and we'll drill down on that, for the amount of premium that you pay. And that's our niche in the world of long-term care solutions. A little bit about NGL, no, we're not Guardian. A lot of people say, oh, so the DI company, right? Guardian, no, we're National Guardian Life. We've been around for over 100 years, since 1909. We're an A-rated carrier from AM Best. And most importantly, we partnered with an expert long-term care third-party administrator called Life Care Assurance, which has been around forever. They kind of pioneered long-term care insurance years ago as a large TPA and administrator for many carriers' insurance products. So we partnered with them to create a traditional long-term care policy about not so long ago. We partnered with them and started in the long-term care market in 2017. Now, I will tell you this. We have a very good story in the world of traditional long-term care. Now, many of you may be sitting there thinking, well, traditional long-term care, boy, a lot of those carriers, Genworth, John Hancock, MetLife, they've been doing it for a long time, and I know people, and I may even have clients who've had that, and they've had these in-force rate increases that they were not expecting. Yes, you could say that pretty much all many of the carriers still offering it have had in-force rate increases on those old blocks of business. But the good news is with National Guardian Life, we got into the market in 2017. Our pricing from the get-go, when we price this product, it is fully based on actual long-term care experience data, right? Claims data, reliable industry claims data, and persistency data, right? We don't have a book of underpriced business and products that were based largely on guesswork, because those older products with those old books of business were priced at a time when long-term care insurance was in its infancy, and they didn't have reliable claims data from which to price product. And as a result, many of those carriers have had to increase premiums on existing policyholders, and continue to do so because they have to, keep their book of business, their overall business viable. And when you have that book of underpriced business you're trying to manage, it can make it a little difficult from a carrier standpoint, and sometimes that trickles down and affects the overall policyholder. The good news is with this, with National Guardian Life, we don't have that issue, right? We don't have a book of underpriced business, and we've never raised rates on enforced policyholders, so we don't have that issue, which is a good story to tell. Not only fact based, like I just explained, but when people look in, when consumers look at traditional long-term care insurance, really in many cases they're looking at peace of mind insurance, right? Because they want to make sure, pre-claim, right, before they claim, they want to make sure, well, is the book of business stable? Do they know what they're doing? We absolutely do. Like I said, we're not dragged down by older books of business that are underpriced. And number two, of course, at claim, when someone claims, the client and the family want to know, the first thing they say is, well, how much money is in my third party checkbook? And with our product, the amount of funds available for them at claim time, vis-a-vis the premiums they put into it, are just really tough to beat. So with that, let's go to the nuts and bolts of the product, right? The name of our product is called Essential LTC. And again, it's called that because it, kind of goes to the essence of insurance, right? And with traditional long-term care insurance, it is very customizable, right? There's no, plan A, plan B, plan C. Yeah, you could communicate it that way. You could always talk about prepackaged plan designs, but traditional long-term care is very customizable. And here are the moving parts with our product. One, and when it's a husband and wife, keep in mind they're both selecting their own benefits, right? Their own pool of money, right? Their own policy pool. And the choices are 2 years, 3 years, 4 years, 5 years, or 6 years for each spouse, right? So that's, I will say, moving part number one. Select your benefit period. We also have a lifetime benefit, unlimited. I'm going to get to that in a little bit. Um, so we also, so that's number one. Moving part number one. Moving part number two is, what is your daily benefit going to be? You can select anywhere between $50 and $300, right? So as you can tell, just with the first two choices, you do have the ability to really, meet anyone's, a wide range of plan design and budget considerations. Um, our product automatically has a 90-day service day elimination period, meaning before the policy starts to pay, one must incur 90 days of a service, and that service must be at least 2 hours in a particular day. For facility-based care, it doesn't matter, but for home care, at least 2 hours of care in a day, and then the 90-day elimination period is met. However, this product, of course, has an optional rider that can create first day coverage for home health care. We call it the 90-day elimination period for home care riders. So that is available as well. Another option that I did not put on there, but is almost a given. In fact, I don't even consider an option because it's so necessary, is inflation protection, right? You want to have, and most people, of course, want the policy to increase automatically with inflation, right? So the premium remains level, or at least is planned to remain level, whereas your benefits automatically increase over time. And we offer 3% and 5% compound inflation options. So those are essentially the moving parts. Let's get right to the sweet spot, though, where this product performs and is most appealing, which is for couples close in age, right? Now, this product is somewhat unique from other carriers in that when you have a husband and wife or domestic partners applying for a policy, it's essentially what they call a joint policy. Now, they each have their own pool of money, right? They each have their own coverage, like I explained in the previous slide. But it's considered a joint policy, which means there is one premium, right? One blended premium for both partners, or both spouses, right? The cool thing with that is because it's one premium for two people, if one of them, if one spouse needs care and goes on claim, for example, let's say the husband needs home health care services and goes on claim, that entire premium is waived, right? Which is the premium for both people. So the healthy spouse, essentially, her premium is waived as too. So as long as one spouse is on claim, the entire premium is waived while that claim event is occurring. It differs from other carriers because with most other carriers, rather than a blended premium, each spouse has their own separate premium, but there's a discount, for example, because they applied, together. So it's a 15% discount or something. Here, there's no essentially discount. It's a behind the scenes blended rate. And I can tell you that the closer in age that they are, the more of the more impressive the pricing is. In fact, it's almost a buy one get one free for a couple when you're comparing it to other carriers in the market. So it is a really unique in that respect. Furthermore, it is a joint policy, with that single blended premium. If one spouse were to pass away, right? And the surviving spouse is there, still there. The premium is reduced for the surviving spouse, and our illustrations do show that in the event one spouse passes away, we'll show you what the surviving spouse's premium for each of them would be in the event of one spouse passing away. So that's also very nice. Now I'm going to get into something, again, very unique with our policy, and it's called the shared benefit amount rider. What it does is create a third benefit pool for couples, right? Now, this is an optional feature that, quite frankly, most people, most couples do apply for and do add this to their policy, because the bottom line is it adds tangibly more benefit dollars to their overall, I like to call, third party checkbook if care is needed. And here's how it works. Okay, so you have the husband, insured number one, and then you have the wife, insured number two, right? They each have their own separate pool of money, right? They each have their own joint policy. Um, when they select the shared benefit rider, it basically creates a third pool of money, right? A third benefit pool that they can both share, right? In the event, one should outlive their own benefit pool and need more care. I will tell you that the average long-term care claim in the industry is about 3 years, and our average benefit period that people purchase is 3 years. And most people, when they do that, they purchase that shared pool of money that we're seeing here, the shared benefit amount, to get that extra peace of mind if one of them should need care for longer. than 3 years. Right. So, and we'll give an example. Let's say he needs home health care, right? And he has a long-term care event, and he depletes his pool, right? He depletes his 3-year pool, for example, and he's still alive, still needs care. He depleted his policy. Well, unlike most other carriers that have a shared care rider, he does not have to go into and raid his wife's pool of money. What he can do is dip into that shared pool of money, right? In this example, let's say he uses about 3/4 of that and then passes away, right? Let's say perhaps he had to go on and need care in a facility, and then he used that shared benefit rider and passed away. There's a little bit left in there. Well, at that point in time, the wife would have to go back to paying premiums, but her premium is going to be reduced, obviously, because he passed away. But she is left not only with her own pool of money, but what is left with that shared benefit amount. If it were a situation, let's say, where the husband passed away and never needed care, right? Well, his benefit would, his pool goes away, and then she would be left with that entire shared pool. So his benefit would go away. The overall premium is reduced for her, but she has now, in this example, we'll say it's a 3-year plan. She now has a 6-year plan for herself going forward. So he bought peace of mind while he was alive, um, passed away, never needed it. She is left with her own pool and the shared pool and a reduced premium. Very good deal. Most couples do it, like I said. Um, and in this example, again, if she needs it, there you go. So if either or both insureds exhaust their own benefits, that shared pool is still there. And in fact, it's possible they could both be using that shared benefit amount rider at the same time. They each have their own separate daily benefit, a very unique benefit, which ultimately, what it does ultimately is provide you with more benefit dollars, is the bottom line, right? Because you have 3 pools of money rather than 2 with most other carriers. And here's an illustration that shows that, right? There's a competitive scenario. In this example is a 55-year-old couple, right? Age 55 couple, which is about the average age of a long-term care insurance purchaser. And in this example, it is indeed a 3-year plan each at $200 per day, with 3% compound inflation, automatic compound inflation. And the NGL premium, combined annual premium, 63.77. And on day one, what is the leveraging here? Or should I say the total amount of long-term care benefit dollars available on day one? Well, it's $657,000 because we have that shared pool, right? In pure dollars that's available. We go to the other carrier right here, and most other carriers would fall under this category because they have, with their shared benefit rider, all it does is really build a bridge between the two pools of money. Meaning, if he were to run out of his pool, well, then he can start using his wife's pool. But the bottom line is that in terms of pure long-term care benefit dollars, you're looking at $432,000 compared to $657,000. And of course, let's look at the premium, right? The other carrier, the mystery carrier here, is the premium is about $7,500. So the bottom line is, for less premium, you're getting more benefit dollars. Like I said earlier, right? It's the essence of insurance. What people do, what they look for when they're looking at, for a pure protection They want the most amount of dollars for the least amount of premium, right? Transfer the most amount of dollar risk for the least amount of premium dollars. And for couples, right, it's just it's hard, not to beat this. Now, if you have someone, if you have a 78-year-old single female, you know maybe carrier, the mystery carrier here is the better carrier, right? um or maybe if it's a couple, age 79 and 75, maybe we may not look as attractive as we do here. But I will tell you, for the meat of the market, couples in their 40s, 50s, 60s, that are close in age, looking to do the right thing and get the most long-term care benefit dollars possible. It's just going to be really tough to beat. So I want to show that, because that is essentially really the sweet spot of this product, and very, very attractive. I wanted to talk about a couple other unique offerings with our product. And number one, like I said before, and this is hard to come by in the industry, in the world of long-term care solutions, there's only one hybrid product that offers a lifetime benefit, and only one traditional product that offers an unlimited benefit. And we are the traditional product that offers an unlimited benefit period, right? So you may have people, like I said, the average claim is 3 years, right? That's the average claim. Um, but there may be people, that don't want average term care. There may be people, who want the ultimate leveraging, the ultimate peace of mind, which is an unlimited benefit period. Listen, I come across it frequently. People who have said, listen, the reason I'm even talking about and looking into long-term care is because my parent had a horrible long-term care situation, which went on for 8, 10 plus years. It could be, especially when you have someone who had a dementia situation in a family. It happens. And there are people out there who say, listen, I know the odds of, needing care for beyond 3 years are somewhat low. But hey, it happened to me. So the odds for me are 1 out of 1, because my mother was in a facility for, 8 plus years. So yes, I want to look into an unlimited benefit period, and we can offer it. We do have that. Which is very nice. Um, Additionally, when it comes to premium payments, right? We're the one carrier that, in addition to lifetime premiums, which you pay premiums for the rest of your life, you budget in the premium payments and you pay for the rest of your life, or until you need care, at which time you go on waiver of premium. We have a 10 pay, in which you pay for 10 years and then it's paid up, right? The policy is totally paid up after 10 years. That 10-year premium is guaranteed, right? You're guaranteed that the premiums will never, ever increase when you have a 10 pay. So a lot of people say, well, you know what, I like long-term care, and I like your product because you've never raised rates, and you have a very clean book of business, priced correctly from the get-go. But nonetheless, the premiums are not guaranteed. Well, you can get guaranteed long-term care premiums with our 10 pay. So that's available as well. Additionally, we have a single pay option, right? If one wants to, has a lump sum that they just want to get it over with in one shot, and of course that's going to be guaranteed because you're not paying ongoing premiums, you could do that as well. That actually, our single pay option, opens up the door for 1035 exchanges as well, which I'm going to talk about in a second. Um, and then we do have a return to premium option, and then a return to premium option plus, meaning that return to premium option also has a surrender value feature, which after the 4th year, if you surrender the policy, you can get 80% of your premiums back. Then, of course, with the return of premium feature, if you have a client who absolutely wants that double peace of mind, right? Meaning, hey, if I need long-term care, I want to be, nicely covered. But if I never need it and I passed away and never needed it, I want to make sure that the premiums are returned to a beneficiary. Well, that's what you call double peace of mind. You might want to look at a hybrid product as well, to compare. But if the client has no life insurance need, and all they just want to pay, premium dollars for just long-term care, but they want that double peace of mind, well, we have that return to premium option available for them if they want to take a look at it. So as we have there. Now, a couple of quick sales ideas, and the big one is 1035 exchanges. I will comment quickly on one sales idea, which is for business owners, right? Everyone knows people that owns a business, and people that own business sometimes get nice tax advantages. That is definitely the case when it comes to long-term care, because the premiums with long-term care insurance are for business owners. When the business pays the premiums, the premiums are tax deductible, right? We do have the 2024 tax advantage worksheet that explains what the tax deductions are, and they're age based. So the business owner and a dependent spouse, if the premiums are paid by the business, can deduct a portion of their premium. In many cases, based on age, you can deduct the entire premium from their federal income tax filing for the business. So that's something always business owners are great people to talk about with this product. I also want to mention, I don't have it written here, but this is individual long-term care insurance, and it's traditional long-term care insurance. And in the state of Michigan, as long as you have, and in most states, by the way, not just Michigan, but most states, as long as you have 3% compound or better, so 3 or 5% compound inflation protection on it, you get the extra protection of it being qualified for the Michigan Partnership Program. What is the long-term care partnership, right? The partnership program in Michigan. In most other states, what it does is it's an addendum to your policy that states if you deplete, right, use up your long-term care benefits, and you use whatever you used up in terms of benefit dollars in your long-term care insurance, you get that Medicaid asset protection. Let's say I used up $300,000, right? I had a long-term care policy and it paid out $300,000 in long-term care benefits, but I depleted it. I'm still alive, still need care, right? Well, because it was partnership certified, I can legally shelter from the Medicaid spend down requirements in the state of Michigan, $300,000. So it's basically a tax incentive, and it's an incentive to plan that many states give to purchase long-term care insurance, because you get extra spend down advantages to qualify for Medicaid. Normally, in most states, you have to spend down to the bare minimum, right? You have $10,000, $5,000, and then you qualify for Medicaid. But if you had traditional long-term care insurance, you get to protect a like amount from Medicaid spend down requirements. So I do want to mention that, and the fact that that only applies to traditional long-term care insurance. It does not apply to hybrid or life insurance-based long-term care solutions. Now, as I said before, we do have a single pay option, and pretty much, a main reason we have that is for 1035 exchanges, right? Because I'm sure many of you have clients that have an existing non-qualified tax-deferred annuity or a life insurance policy, and it's very possible that they have accumulated a lot of gain in that contract, right? Well, and it's also possible that they don't really have a use for that life insurance policy or the annuity anymore. However, they would like to continue the tax deferral of the gains that they've made. Well, we do have a single pay option in which you can do that. They can take that policy, do a 1035 exchange, take those tax deferred gains and continue them and purchase a single pay long-term care insurance policy. The leveraging, again, since it's traditional long-term care, the leveraging, even with a single pay option, is truly impressive. Even if you compare it to many of the hybrid asset-based solutions available today. So you can continue that tax deferral, obtain a immediately paid up single pay long-term care policy, and those benefits, because it is called a tax qualified long-term care plan, the benefits are guaranteed to be tax free. So essentially, you could find that money, utilize it, and which is potentially a taxable asset that you have, and convert it to tax-free long-term care benefits. Very popular concept. And we are the only traditional long-term care carrier in which you have that. All right, I'm going to mention this quickly, our long-term care rate calculator, which I truly think is the best in the industry, if not for one reason, in that you could just do this from your phone. I love it. I use it all day, every day, because you don't have to log in. No user ID, no password. It's simply a link, and you can see what the link is right there. And we can send this out to you, but you click on it and you have what you see on the screen, right? You can go right to it. It's very useful for your phone as well. So there's no, oh, let me see quickly. I have a husband and wife either on the phone or even face to face. Let me see if I can do a quick quote here. You can absolutely do it right away. There's no, let me log in and it's going to text me a code, third factor code to get in this. I don't know about you guys, but that sort of stuff drives me nuts. This is right off the bat. You can go right to it. It's called really the quick quote calculator. And the cool thing, the output is awesome, because not only does it tell you, as you can see there, if you squint, not only does it tell you what the leverage is on day one, right? Here's your day one, here's what your premium is, and here are your day one benefits, combined benefits for a couple, and it includes the shared care rider that we showed previously. It shows the same at age 85, right? Here's the cumulative premiums you paid up to age 85. It's assuming, of course, no claims at that point. And here's what your policy is worth, because obviously it is increased with the inflation option. In this example, this is a 62-year-old couple, preferred. 150 a day, 3% compound inflation, right? And there's what you have: two pools of money of 164, actually three pools, because they took the shared care rider, of about $164,000. So the leveraging is outstanding, and you can do this right off the bat. Then, of course, when it comes to doing business, once you are a appointed producer with National Guardian Life, you have access to the resource center, and the cool thing is it's super easy to submit e-applications. We're in fact we just invested a lot of money into our new business infrastructure to make it easier than ever. So there's that. All right, before I open it up for questions, I wanted to just quickly, and I think this is important. I think this will be useful for you. This is almost, I'll consider this a recap of the last presentation that my coworker Lawrence did. These are when you have the conversation. These are just terminology and verbiage that I will recommend you use. Right now, I do think in the business we're in, long-term care planning is unfairly characterized as nursing home insurance, right? Hey, this is, a lot of people say, and I've been in long-term care my whole career since 1990, actually. And a lot of people say, oh, yeah, it's Mike, the nursing home insurance guy. I'll call him when I'm old. No, that's not what this is all. That drives me nuts. And that's not what this is about, right? This is about a long-term care event can happen at any age, and it happens unexpectedly. And there's an old saying that your health is what buys a long-term care policy. Money just pays the premium, right? There's something called your health currency as well, which is important when it comes to being able to put a plan in place. So what I have here are just some words that kind of, make long-term care planning to kind of erase that perception that this is old people's insurance or nursing home insurance. Number one, don't call it nursing home insurance, because if anything, call it stay-at-home insurance, right? Because that truly what is what it is. The vast majority of claims are paid as home health care, right? And aid to assist you in the home. So that's really what it is. And I think it's important to educate people that, really the technical term is custodial care, right? Which is hands-on or standby assistance with your everyday activities of daily living, right? Your daily functionality for whatever reason, right? It doesn't matter why. I think, never call it medical care, because it's not. This really is custodial care we're talking about. And, again, there's that negative perception, the imagery of this being old person's insurance, or, from when you get old and sick or when you become frail. Now, I think the better terminology is to say when your health becomes compromised. Right, doesn't make it happen at any age. Whether your physical or cognitive health becomes compromised, you may need you need assistance. So, yeah, could frailty play into that? Sure. But I just don't like calling it, yeah, it's for when you become old, sick, and frail. No, it's when your health becomes compromised. Um, I also don't like the term of a caregiver or a caretaker. Again, that conjures up the imagery of someone, being old and having a caretaker wheel them around in the wheelchair. I like to say, a care supervisor, manager, or maybe an aide. Having an aide in the home to help you with your everyday activities. And then of course, the risk with long-term care. We all know what the risk is. I mean, the big statistic is once you turn age 65, there's a 70% chance going forward that you're going to need assistance, right? You're going to need care, right? But you know what we're doing here is talking about the consequences, right? We're trying to make what is normally very much can be an unmanageable situation, right? When I talk about unmanageable, I mean both from a financial standpoint and a personal standpoint. So trying to make an unmanageable situation into a manageable one. And that's where long-term care, what we're talking about, long-term care planning comes into play, right? And I'll leave you with this and then we'll open it up for questions. That's why when you're looking at plan design, and I know many times you're trying to budget for a right plan design, and that's where Tyler and I can help. Sometimes you say, well, hey, something is better than nothing, right? You're trying to afford. the better thing to say is that a little goes a long way. With long-term care planning, a little goes a long way. A lot of people, a lot of advisors and producers out there, when I say, well, why don't we take a look at $100 a day? Some people even they scoff at me. What do you mean? That's not much. What is that going to do? Hey, I will tell you that I took care, 20 plus years ago, I took care of my grandmother, kept her in the home, kept her out of the facility. Someone would have given me $100 a day to, help make it easier for me and to pay for a home health aid for her. It would have changed my life. So that's and I think most people can relate to that. So rather than saying something is better than nothing, say a little goes a long way and come out with an example. So there you go. I can open up for questions right now, and here's my contact information. If anyone needs to get a hold of me, my cell number is best, and that is area code 415-302-7600. And with that, I will open it up for questions. All right, any questions? I don't think so. Tyler, it seems we covered everything. I don't hear any questions unless anyone is typing some. Um,
Yeah, you guys can feel free to type any questions you may have or raise your hand. If not, the video will be recorded and sent out to folks who have attended. So yeah, again, thank you, Michael, for hopping on today and walking us through that. That was a lot of good information, digestible. And it was very much
absolutely.
appreciated.
My pleasure. Anytime. All right, everyone. Well, listen, have a great weekend. And again, don't hesitate to reach out if I can assist you with any opportunities you may have. All right, everyone. Thanks. Have a great weekend.
Thank you, Mike.
My pleasure. Thanks, Tyler.